It's gearing up to be one of the craziest weeks in the stock market as the S&P 500 is down 5%. NASDAQ, actually, without really many people noticing, is down 8%. Now, both of these indices are at their 100-day moving average or hit their 100-day moving average, but we have a ton of stuff upcoming this week, and there are a lot of data points that we need to cover here. We are about halfway into earnings season as well. There are about half of the companies of the Mag 7 remaining to report this week as of the time of this recording, which is April 28th. And then obviously we will have NVIDIA reporting earnings, although judging by the fact that Jensen Huang is comfortably sitting here at a Denny's for a 60 minutes interview, I think they'll be just fine. But in all seriousness, let us talk about what is upcoming here, and I will give you my analysis and my updated investment plan considering where we are currently in the stock market. Our asymmetrical bets have been paying off. You guys know that I've only been bullish on a few things, Google being one of them. Google now hitting all-time highs. We've talked about why I was bullish on this, because I thought that there was an overreaction decline due to their AI being woke or whatever. And it was clearly in oversold conditions and one of the cheapest Mag 7 stocks. If you look at Google's PE ratio at the time was in the low 20s compared to the rest of the tech companies. Was happy to buy Google in the 130s at the 200-day moving average at the golden pocket. And we have now reaped the rewards of this just in a month and a half, up 31% on our Google investment. So I will be giving you my updated investment plan, as well as where I think the market is going and what we should pay attention to this week. You definitely want to listen up. Let's get right into it. So first things first, let's talk about earnings so far. Earnings were not as bad in Q1 2024 as some might have projected. Actually, earnings still reporting very strong. Now, some companies report guidance, like Microsoft reported guidance, Meta reported guidance as well, and it plunged on that weak guidance. But there are companies like Alphabet, they don't report guidance. Apple doesn't report guidance. But so far, it's looking like the rate hikes are not really having an effect on the bottom line. Sure, a lot of these companies have reported layoffs so far, Tesla being the biggest one. Google, a massive round of layoffs as well. Microsoft had a massive round of layoffs. But as long as it's not affecting the bottom line and they are not guiding terribly, the market doesn't really see a problem with layoffs, in all honesty. So far, as of the time of this recording, we have Amazon reporting Tuesday after market close, as well as AMD. And we have Apple reporting on Thursday. Like I said, the only one remaining at that point of the Mag 7 will be NVIDIA. Now, I have been very deliberately and sparingly playing earnings. I did on Microsoft. We opened up an iron condor because based on my data, Microsoft misses the expected move 70% of the time. So buying calls and puts would have crushed you. So we opened up an iron condor. Here you see the iron condor order right here. And we are up 60% on this Microsoft Iron Condor. So this week, I'm going to make a determination of which earnings I want to play. Now, what else is coming up? Well, all eyes will be on FOMC on May 1st. Now, if you guys are fans of this channel, you know it's no surprise that the Fed actually didn't cut last FOMC. Just like I said, they will not cut, and I don't expect them to cut in May. And I actually thought that it was really a long shot and fantasy land that the Fed was going to cut 6 times this year. I've been saying that on and on. And now if we take a look at the FOMC watch tool, you'll see that even in September, it's neck and neck between a cut and a skip. And it's not until we get to November that there is a projected cut, 45% likelihood of a projected 25 basis point cut in November. So right now, the market is pricing in only 2 25 basis point cuts for the rest of this year, which is a far cry from where we were last year. Now let's take a look at the annualized percent change in core PCE. The reason I'm looking at core PCE and not CPI is because CPI continues to disappoint. As a matter of fact, when I've done a video on CPI before, I showed you that of the last 8 CPIs, only 1 came under expectations and 1 came at expectations, and the rest of them came above expectations. CPI right now is a joke. Plus, the Fed says that they pay attention more to core PCE. That is their preferred inflation gauge. And it was fine for them. And you know, they were able to, let me move this out of the way because my fat head is in the way. But they were able to say that with confidence because core PCE was actually declining at a faster rate than CPI. That is not the case anymore. Core PCE actually looks worse than CPI when you look at the annual percent change here. And we are definitely trending the wrong way. We went from under 2% to now back above 4.4%. So I don't think the Fed can skip, obviously, in May, or sorry, can cut in May. And as a matter of fact, I tend to agree with this article that came out here saying that the Fed likely to scramble back to a hawkish stance because things have really, from an inflation perspective, been going out of control. And this is why the 10-year that went all the way from 5% last year in October down to 3.78%, and now it looks like it's inching back towards 5%. As the bond investors are definitely signaling fear due to the fact that inflation is not going away like they thought, right? So bond investors are now demanding a higher yield for protection if they're going to invest in bonds. And that's why you see the bond yields rising once again. Now, the fact that there's a wide disparity in bond yields between Japan and the US, where Japan is basically dealing with near zero rates and the US is dealing with peak rates, this is wreaking havoc on the Japanese yen. Now, I may do another video on this. I don't know if you guys are even interested. Let me know in the comment section, and I will do a video on what is going on with the yen. But in short, it is basically the difference between where the US Fed funds rate is and where the Japanese funds rate is, right? And the fact that Japan's #1 investment is US Treasury. So this is definitely something to watch out for when I talk about the economic risks that I see in the market still, right? We're going to be covering this a little bit, but if you want a detailed video on this, let me know. Now, alongside FOMC, which will be on May 1st, obviously we'll be covering it live on this channel. We do have ADP non-farm payrolls. We have consumer confidence, we have JOLTS job openings, we have manufacturing PMI, we have unemployment claims this week. We also have NFP, non-farm employment change. So we have a ton of stuff coming out this week, a lot of market moving news. This will be a fantastic week if you are a day trader for sure. I know a lot of day traders in our group are salivating right now at the economic calendar here. But what does this mean if you are an investor? Like I said, the stock market had a 5% correction. This was definitely much needed. But whether the market corrects more or not has to do, in my opinion, still with the guidance of the remaining companies. We all saw how Netflix, Meta, Tesla before earnings really contributed to this downfall here, this little correction that we see in the stock market. It's really more of a pullback. Now, it is my belief that we will retest this 480-ish area of the SPY. We've never hit an all-time high without retesting that area. So I think we will retest this 480-ish area. Like I said, will depend on guidance of the remaining stocks. But during election years, we also tend to see a lot of weakness in Q2, and then that weakness picks back up after the summer is over. So sometime between now and the summertime, between now and the end of the summer, I do think we will retest this 480-ish here. And if we take a look at the weekly chart, you could see that this little drop, this is just a blip here. But every time we are oversold on the weekly, I want you to take a look at this for the last couple of years, right? Every time we are oversold on the weekly, we have never not hit at least 50 on the weekly RSI, right? So, overbought. So when we are overbought, we tend to retrace, the price tends to retrace and force the RSI down to the midway section. Now, I don't use the RSI for day trading. I think it's a really dumb indicator for day trading, but overall large long-term analysis, I think it is very effective in a broad sense, right? But it's not very precise, which is what you have to be precise when you're day trading, because you're dealing with exact levels. When you are looking at a longer term analysis, you can be a little more blunt, right? So we've never not hit 50, at least on the RSI, when we were in overbought conditions. And this data goes back 2 years ago, maybe 3 even. So I do think there is a little bit more downside here. Like I said, whether it happens now or whether it happens during the middle of the summer, towards the end of the summer, I don't know. Now, in terms of an investment, right, or a trade or whatever, swing trade investment, if you told me that every time the RSI on the daily gets to oversold levels, you're going to dollar cost average in the SPY, I would tell you that's probably a good strategy. Look at every time we were oversold on the RSI. It might not have been the exact bottom for that time frame, but it is definitely an ironclad strategy over the course of the long term if you just picked up disproportionately more shares of any of these blue chip indices every time we were oversold on the RSI. So although for me and my cost basis and the way that I invest and the fact that I went in heavy in 2022 and 2023, I personally am not buying the SPY at 500. No way. But if you were just a dollar cost average investor, you were not really an active trader, and you stuck to the plan of buying the SPY or QQQ every time we hit oversold on the daily RSI, that is actually a great strategy long term, and you cannot argue with that. For me, and I'm going to talk about the challenges that I see in the market and the economy coming up, but for me, I'm still only looking at asymmetrical bets. This is what I told you when I bought Google, if you guys remember this. This is what I told you when I was talking about Riot. Riot now up 35% in the span of a week. Right? These are the types of things that I'm looking for. This is what I told you when I talked about Tesla. Now, admittedly, Tesla did drop down to 140, and I was okay buying it in the 170s, but I ended up buying it in the 140s again as well, right? Adding to my position on that ridiculously low price there. I'm personally not happy buying the SPY at 510. I'm not happy buying QQQ at 430. Even though these things can move up, in my opinion, in the short term, if I'm talking about swing trading, to me, there are a lot more things to be cautious of here, right? And let's talk about what I see for the economy and the markets coming up. Number one, and I've alluded to this time and time again, the thing that scares me about this market is not a peak stock market. I'm not one of these people that says, oh my God, the stock market looks toppy, time to get bearish. No, I don't care about that. I actually want the stock market to keep making all-time highs. For me, it's peak rates with a peak market. That combination has never, ever boded well for the stock market. Never. And if we take a look back to 2007, and no, for those of you that are about to hate, I'm not comparing this to 2007 or 2008, right, in terms of what I think the market will do. But there are a lot of similarities pre-recession, what happened then and what's happening now, right? 2007, peak rates, 5.25%, ironically, the same exact rates that we have now. Gold prices rising significantly. Back then, a high of 841, which seems laughable now. Now we're talking about, 2,300 an ounce. Oil prices, you know that I've talked about this time and time again. Oil surging back to, towards $85 per barrel, and I think it will go even higher. Obviously, inflation still being a major, major concern here, right? We don't even need to go over this because I just went over this. And because of that, the fact that the Fed needs to keep rates higher for longer, increasing the chances of something breaking, not only here, but now also in Japan, right? This is something that we have to keep an eye out on for sure, because we've seen before where the Asian market and what's going on there can actually affect the global economy as well as the U.S. economy, right? There's also a little bit of complacency here. If you look at the SPY and QQQ, these are net shorts. This is at a multi-year low. This is according to JP Morgan research, right? This is at a multi-year low. And you guys know when there are, an increased number of shorts, that's when we tend to see squeezes. Well, the same thing can happen for an increased number of longs or a complacency in going short. You can also have instead of a short squeeze, you can have a long squeeze. Now, as I've stated before, in my opinion, I think we will have some time to exit the market when things really hit the fan. And by hit the fan, I'm talking about a recession, right? There are always markers. And you can even take something as simple as when the Fed institutes its first rate cut. We've seen this in the year 2000. We've seen this in the year 2008. When the Fed institutes its first rate cut, right, it is usually fairly early. Let's take a look at this. You can see here that September 18th, 2007 is when the Fed instituted its 50 basis point rate cut. Well, let's take a look at September 18th. This was September 18th, 2007. This was actually the peak of the market right here. Now, you might be saying to yourself, well, that's cherry picked. Let's try another recession. Okay, let's talk about when the Fed cut its rates January 3rd, 2001, before or because of the recession. This is when the Fed cut rates, right? And you could see the decline following that. So if you really pay attention to the macro and you pay attention to when the Fed cuts rates, that is when shit hits the fan. And in my opinion, this is why I get questions all the time from people saying, you always talk about, a recession being the most likely scenario. And although I don't predict when a recession will occur, I get this question all the time, right? And people conflate that with, that's why I'm sitting on cash. And I'm like, I'm not sitting on cash. I talk about investments all the time. I've talked about investments in 2022 and 2023. I've told you that I was buying the SPY at 410 in 2023 in October. Go back and watch the video if you don't believe me. But I don't get into this conflating between, yes, I think that a recession is upcoming and I'm uneasy based on all the factors that I see, and the factors are growing every day. But that does not mean that I'm just going to sit on the sidelines. Yes, sometimes I hedge. I told you guys that, when I was going to buy VIX calls, when the VIX was 13, I told you that after Iran attacks Israel, after Israel retaliates and attacks Iran, that you could buy VIX puts, and the VIX went from 22 all the way down to 15, right? I told you that there was an undeniable opportunity in buying the weakness on Google in the 130s. The reason all of this is because I know that nobody can time a recession, and I know it's coming, but I'm not going to just sit on my hands until it comes. I, thank God, have enough skills to be able to maneuver the markets, to be able to minimize my risk. And as I just showed you, most likely you will get a sign before a major, major decline. And that sign is when the Fed finally cuts. When the Fed finally cuts, that is when I will likely start panicking, based on history, not based on, my mood. So with that said, if you want to get the full gamut of my analysis, my real-time analysis, if you want to get the full gamut of my swing trades, my investments, my day trades, we day trade futures on a daily basis. I live trade with the group every single day. Come join us below. Use the coupon code that you see in the description below. Make sure that you don't check out without using that coupon code. Let me know your thoughts in the comments below. Are you fully in cash? Do you think that this was just a 5% correction and we're going to take off from here? What are you looking to buy? Did you recently sell any of your holdings? I love to hear from you. Leave it in the comment section below. Subscribe to the channel. Hit the notification bell. Stay safe out there, traders. Peace.